What's up, guys? This is Baro, aka Invest Mentor. Thanks for your time and watching. Before everything, please, as usual, please strike the like and subscribe button down below with any of your thoughts and comments. We will definitely reply to that. And also in the description box down below this video, please support to donate if you can, and then that help us to maintain this channel to improve a lot of things in the future. So today's another Tuesday, July 20th. So what's been big in the past couple of days? Like as you know, after the weekend, the bad thing just happened. The bad news. The COVID-19, the Delta variant just got like spreading like further. So that made the markets like all around the globe, in the US market, like European market, like also Asia market, all the like a major stock market and major indices just like pull back really sharply in the past few days. So I mean, what are we gonna do with that? The potential, it's not a terrible market crash yet, but so far the market has just encountered a sharp correction in like 3 to 4 days in a row. And like as mentioned by many financial experts and professionals in the past couple months over and over again, like the Big Short, Michael Barry, and like Rich Dad Poor Dad, Robert Kiyosaki, and also like the Wall Street guru, Bruce Greenwald. A lot of experts mention about the potential market crash. So it's July right now. So from July, August, and September is going to be the third quarter. A lot of experts say in the third quarter, the risk and the volatility going to be really something we have to pay attention to. And I also mentioned about this, discuss about this in my previous short videos and live stream about what will be the hedging strategy or the portfolio or risk management we can do, and some of the easy, like simple but really important key practice we should learn and pay attention to. Please check into that when you have time. And in today's video, we're gonna see like, I mean, like it's just like safer to be more conservative, defensive, and protective for your trading investment in the third quarter this year, instead of keep like gambling or chasing the greed. Seriously. And so what we're gonna do? I mean, we're gonna have a really quick look into the like meme stock as always, and also like cryptocurrency stocks and some of the value stocks. Why? Because I'm saying that during current market environment, meme stocks are highly risky. I mean, as you can see, a lot of the meme stocks have like suffered a lot in the past like a couple weeks. And then but I mean, if you are experienced and skillful enough as a trader or investor, you probably have done like a brilliant short selling strategy for some of the meme stock. But I mean, for the general public, I think it's really better to get away from those meme stock for the third quarter, and it's better to appropriate to move your capital into more like a hedging assets. If the market crash really happen, like cryptocurrency, like Bitcoin, Dogecoin, and Ethereum would be a much safer place to go. And they might even go like reversely against the market crash. If the market crash for like 30%, those like cryptocurrency might not even drop, they might even like pick up. So that's the difference. And then we will look into some of the major cryptocurrency related stocks. That would be more kind of like also with like protective like nature against the potential market crash, but it's not like as aggressive as cryptocurrency. It's kind of like neutral between the general stock market and the cryptocurrency directly. And if we have more time, we will check further into some of the value stocks like FANG, like Google, Apple, Amazon, those stocks, and maybe some of the US stock queen Cathie Wood's ARKs, like a major holding, or some of the value stocks, the big band stock like Goldman Sachs, JP Morgan. They perform really well in the second quarter earnings season. So yeah, let's start. So yeah, just as you see, like later on, the market will be open in just about like 8 minutes. So we will also like check into like what's going on for the first like 30 minutes of the trading hours today. Okay, so and you can see like right now, like other than most of the major indices in the financial market, you can see the oil price just like drop like over 10% in just few days as the worst assets out there. So that's yeah. So seriously, pay attention. Like anything right now during the market condition right now, anything might have the chance to be the last straw that break the camel's back, or the last snowflake to make the avalanche collapse. So really, we have to be really serious about that. Right. Let's see. Let's start. Yeah, in my previous live stream, I have like collected some of the major meme stock here. So in the previous like the live stream, we can see a lot of the meme stocks like GME, like AMC just has been in all, most of the meme stock has been like going through a downtrend in the past couple of weeks. And so if you're but I gotta say like GMC and AMC and GME are kind of the meme stock king and queen, but we talk about that like over and over again. Especially during the market condition right now, it's like too unstable. It's like too risky because by the chart, by the pattern of it, by the capital flow and the market voice of the two stocks, it's just like kind of in a mess. Like it has like very high chance to go up and down like randomly. So it's like harder to predict the trend. So if you really an addict to like meme stock, I would say let's see. Like if you look at Blueberry, it's if you look at in the I mean in the past like few weeks, it's in a much smoother downtrend. So if you do like short selling strategy, that would be easier. And by the example of like Blueberry, you can see to the upper left hand side, like some of my beloved traders, I mean, I think like for most of traders it's going to be easier and it's going to be more effective to use just like few indicators. For me personally, I use like moving average that I think like a lot of people use, and also some of the trend line I draw based on the previous high and low, and the and also the volume at some point of time. Yeah, hi guys. We already have some people. Thanks for coming in the chat room, and yeah, I will try to answer all of the question, but just give me a second. Let me finish this for BlackBerry. Okay, so I was gonna say you can see for stock trading. I usually use the moving average for 5, 20. I usually use 5, 20, the green one, and the red one is like a 50 and 200. Like 5 just like 5 days, like it's like a weekly moving average. And 20 is like a monthly moving average, and 50 is similar to like quarterly moving average. But a quarter is probably have like 60 to 70 days, but like 50 moving average is I mean much more is like mostly used by a lot of traders and investors. So that's more accountable, that's more reliable, that's how it works. And a 200 moving average is the same thing. Like a year we probably have like 225 working days, but 200 moving average is mostly used by a lot of traders for to assess the yearly moving average line. So I usually use these four to see some of the breakout point for uptrend, downtrend. And you can, I mean, this you can like a cross like estimating them. So you know you can use some people use like the cross by like a 15 moving average and 200 moving average, but it's not necessary. Sometimes you can use like a moving average five moving at five to cross like a 20, to cross like 50, to cross like 200. It's kind of like a layer by a layer, a step by a step. The like when like 50 cross like 200, usually the trend is gonna go up or down for longer or for harder. But for example, if it's a 5 to cross like 20, it's gonna be the momentum is gonna be lighter and gonna be shorter. That's the way I define the market, how it goes. But of course, like different trader will identify or just like use the moving average different way. Okay, so let's see. I think you guys can get a move. I can do. So okay, someone is asked about like Boeing. Take a look. I like, to be honest, I haven't like paid attention to Boeing recently because but I think like just like based on my like a common sense for like Boeing in the past, I think like Boeing and also like by the chart we can look right here, Boeing like it depends. I think it depends on your strategy. If you're gonna go for like short, if you're gonna go for long, if you're gonna do like a swing trade for just like few days. To be honest, I'm not sure because I haven't got a chance to look into some of the details for the technical and fundamental analysis. But in the long run, this I think it's a like easier common sense. Like Boeing is definitely another good bet, good target to follow. So yeah, please let me know more detail if you are looking after Boeing. Okay, someone is still, yeah, AMC is like discussed by the market like day after day, but seriously, I was gonna say AMC and GME are just not good to go after, especially in current market condition. Let's take a really quick look into AMC. You can see AMC like originally all the main stocks are not like worth investing. They might be good to trade in the short term, but it depends on your strategy. It depends on you're gonna do day trade or you're gonna do swing trade or you're gonna do investment. But all the meme stocks are definitely trash, garbage from the standpoint of investment. No one's gonna hold like a meme stock for over a quarter, for over a year, right? And the things like if we look at like the chart of AMC right here, yeah, you can see like The previous line we draw here, let me redo it. Let's assume if there were like no line here, so let's get it. So this would be the support, I would say, and but the previous oh sorry, that would be the resistance, but the previous support would be, for me, I would look in this way. Why? So you already break down the previous support, the upward slope line I just drew here, based on the previous volume with like some high volume here, with the low here, with the high here, with the low here, with the low here, two. Yeah, it's you can know. I mean, it's not hard to understand what I'm doing and why I draw this line, right? Based on some of the previous high and low, okay, to have the support for this line, and it's like you already like break down the previous support, and if we after the support and the resistance trend line, we can use the like a moving average, like the 5-day moving average, the blue line. The blue line just like break like 50-day moving average. So if you really have to do AMC, if I really want to do that, I would do short. I will keep like do short. But the reason why I'm not looking after AMC, the thing is like there are like too much noise for AMC. Like anything could happen, like later on, a few hours later, or immediately, or tomorrow, to make like AMC like peak out like over 20%. So if you want to short it, you're probably gonna be really bad. But if you want to long it, the technical analysis just telling you it's not right to long, right? So how can I decide if I want to buy it or short it? This too much noise. You cannot have like a more factor to decide for long. You cannot have more factor to decide for short. So that's why I just cannot do it. And it's the same thing for GME. Let's see. Okay, it's the same thing here for like GME. GME is kind of like a consolidation. It's not like moving as volatile as like AMC. So like for these type of stock, usually, I mean, we do for meme stock, we have to pay more attention to technical analysis. But when certain stocks are like moved up and down by a lot of like white noise and just unreliable and unexplainable factors and reason that could like pop out anytime, what's the point to do it? Like when you do it, it's just like gambling. So I mean, instead of like trading like GME and AMC, I would rather just like go to casino. It's gonna be more exciting, I think. So let's forget about AMC, I think. Please, seriously, that's from my true heart. I'm not talking nonsense and bullshit. I think like GME and AMC are something we have to ignore and give up for a while, okay? So yeah, talk about DIDI in previous life. What do you think when it will pull back? Yeah, I think like DIDI probably still like forming the base right now, but as previous mentioned, I think like DIDI, personally, I have like a bigger position for AMC's like a long-term investment. So I'm not afraid. I don't care if it like drop like further. I will keep buying the dip. So, but I mean, if you're gonna let's say if you have like all your money originally planned for DIDI, you just want to use all the capital to do day trade, I think it's not good. At least I personally, I'm not gonna do that, because DIDI, like the short run, is not good for like day trading, because in my previous video, I mentioned that. Okay, you can see like after the IPO in 2 weeks ago, it just like pulled back because of the China government like crackdown, the cybersecurity crackdown, and then it's like forming the base without keep going down. And as you can see on the like the news from the public media, they say the Chinese government is gonna have like 45 days like the security, the cybersecurity investigation. So within this period, the price of DIDI probably not gonna move that much. So if you are a gambler, if you cannot wait to have your capital to go up and down, but DIDI is not the target. It will move like after the 45-day period, and I'm not sure if it's gonna like, but of course it's not gonna go from 11 to like 20, 30 all of a sudden, unless there is a super big good news. So, I mean, please, if you really want to look after DIDI as well, maybe do like two-thirds of the capital for long-term investment for the next 2 to 3 years, and only 1/3 of that in the short-term trading. And please like and subscribe my channel, and we will like keep updating you with the information about DIDI. That's also like one of my major target. I'm looking after that. So yeah, please. I don't know when it will pull back, but I think the room for DIDI to pull back is really limited. It's really limited. I would say I would be really confident, even like some like bad news just like happen further, like DIDI probably are not go down below 10 or 9. Okay, so without things big. Yeah, I think like we just like mentioned it at the beginning, that's just a big news in the past few days, you know. But in the past like 1 to 2 years, that's the thing. The COVID-19, the Delta variant, I mean, have been like pulling back the market like many times, like but it's not certain. We're not go if it's gonna be like keep like worsening to kill like everyone in the world, right? But that's also possible, right? So we're not sure. So I would be like neutral for this news. It could be like 50 chance to like go. I mean to worsen. It could be like 50% of the chance to just like recover. But the thing is like that may not be the one shot, but that might be the last straw, or I mean the last straw to break the camel's back. If like the bad thing just like happen one after another, so we're not sure. But we just have to be prepared. It's like a lot of like people say, even like the variant, the Delta variant, even the COVID-19 doesn't get like worse, and some other things like the worsening inflation, and it also the money printing cycle have to be ended soon rather than later. And also a lot of experts say the economic cycles are like a peaking right now. So and also we also mentioned and discussed a lot of those things in my previous videos, like inflation, like potential crash. It just seems to be unavoidable, but like market crash is nothing scary as long as we try to be prepared and calm down. A lot of time market crash are just the chance for us to make more money in shorter period of time. So it's actually just like an annual sales event for us to buy the dips and with discounts. So we just have to be prepared, and you know, just like if we can foresee the typhoon is coming in a few days or next month, we will do something to stay prepared, to be defensive for our life, for our health, for our car, something like that, right? It's the same thing. Okay. Mark. Sorry, I'm trying to answer like as many questions as I can because like yeah, thanks for your time and watching. And a lot of tickers mentioned here, a lot of question here, and some question or ticker are not really like correlated to each other that much. So J&J, but definitely, I mean, like I will write down all the tickers like mentioned here. Like since like you guys are following, if I haven't paid attention, I definitely should follow that too. But even if I cannot answer all the tickers, I will just like do some research and look into those like tickers like later on after my live stream, and I will try to have some time to talk like about those tickers in my a short video live stream later. So please, the most important thing is that you have to strike the like button and subscribe and make some comments, and then like keep following the channel so we can discuss further, right? Because a lot of, you know, like 30 minutes, like 1 hour is really short. It's really... Okay, so like some of the tickers I'm not like looking to, like MRK, SPCE. Yeah, but I will do some research. And yeah, Nvidia. Yeah, Nvidia is one of the major targets I wanna talk about today, and that's also like looked after by my beloved friend. So we're gonna check into that today. And but before that, let's come back to the chart for a little bit. We were in like meme stock, right? So we were like saying if you are addicted to meme stocks, you probably should be wise enough to do like mostly like a short selling strategy for most of the meme stock in the past couple of days or past few weeks. And but like some like special for some of the special meme stock is like you can see like SGOC. We mentioned about that in the last week. And like personally, I think like these stocks, like, you know, that's also like wholly manipulated. It's not so far you cannot. It's not explainable why you just have a surge, and but so far by technical analysis, the chart is pretty beautiful. Let's show it again right here. You can see after the surge on July 9th and July 12th, it just had a pullback in a consolidation right now. So, and it's still, I mean, compared to other meme stocks, it's and those super mover, I think if we are addict to this kind of stocks, can do. I will have like support in this way. It's very easy, right? It's you know, just you can see, just we just use the previous low to have the support level here. And sometimes, like for me, like it's not necessary to have only one support. We can have like 2 to 3 support to have a buffer in the between, something like because I mean, yeah, you can learn a lot of the basic and fundamental like day trading techniques, but a lot of time, like I think like every trader like eventually would just adding some of their different color to their strategy. So you can, I mean, if we draw in this way, we can, the price is about like a 13, 14 here. We can always see have a profit taking at the previous high around here. That could be the first profit taking. Okay, the horizontal line, that could be the first profit taking. If it have a like breakout and like stand firm, we can keep like a we can re-enter again after that. But we can just set a stop loss at the 2 support line here, just draw here. So you can compare the recent return ratio, this way will be around like 1 to 2. Okay, so but this, of course, this is for like a more like a gambling style strategy for short-term trading. But I just say, if you are really addict for this type of style, like SGOC, and the one just went crazy yesterday, AEMD, to be something you can look into. Okay, AEMD was the best, the top mover from those meme stock yesterday. So yeah, so but our, at the beginning we were saying, because of the potential crisis, so in order to be a like stabler and a more conservative and more valuable investor, to overcome the fear and greed we always encounter from day trading and swing trade, better to move your capital from meme stock, from those super mover into some of the hedging assets like cryptocurrency stocks, I would say. Let's take a look into PTON, yeah, Peloton. Okay, so it's a gap. Let's see like PTON. Okay, this PTON is kind of like a mid-cap like a company with a market capitalization around like a 37 billion. So it's like a mid to large cap, and yeah, I think it's kind of like the by the chart and pattern of PTON, Peloton, it looks pretty much like the DraftKings and some the stock called like a Teladoc Health. DraftKings and Teladoc Health are the two of the major pick of Cathie, the US stock queen, and the chart of Peloton looks pretty much like that. Those two stocks, like they just like went really crazy, really strong, over 10 times in 2020, and just had a pullback when the after the COVID-19 release, and just pick up right now, because it's more like it's more like a homey economy. Like when the virus spread, go worse, like the homey economy will have like better chance to take advantage. So that's how Peloton just keep going up. So so I think like in the short, this stock may not be that good in terms of like short-term trading. But like, let's see. But it's also, I think, like from my point of view, from my 2 cents, just by a first look, by a glance over just like 30 seconds, I think it's good for probably the mid to long run as a investment target. If you really want to do, so yeah, obviously had a very strong like a pickup yesterday because of probably earning, good news from earning or something. And so we can see, if we look at the moving average right now, the moving average, you can see the green line is kind of like going up through the moving average 200, but it's not really meaningful from this point. So but for like day trade, a lot of time from technical analysis for day trade, is just if we don't count on any fundamental things, probably can do some like support resistance in this way. So you can see the horizontal line I just draw as the resistance is like based on the previous pressure from March, April, and just the end of like June. So right now it's coming to the resistance. So if you want to do short trade, I mean day trade, if you want to do swing trade for this stuff for PTON, I think for me I would do short. Okay, because as you can see, it's like just like it's challenging the horizontal line, challenging the resistance right here, unless it break out and stay firm above the horizontal line, stand firm above the resistance for over 3 days. All right. So as you can see, that's the way I look at it. You can see on like July 28, it had a chance to spike to break through for just 1 day, 2 days. The third day, it pulled back down below the resistance. So, in terms of like a technical analysis, a lot of time, like just like 1 day breakout is not. It could be a fake breakout. So, like 3 days would be more like stable and reliable. So right now, if I really want to do it, once again, I want to do short, and then you have like a really good like a recent return potential, like from like 122 to the resistance 125 is 3, and from 122 to like 110 it's about like it's about 12, so it's about like 1 to 4 the recent return ratio, right? You use $1 to bet for $4, okay, if you do short for PTON. So oh sorry, someone say cannot hear me, so sorry, so is the voice like clear right now? Sorry, probably I was away for the mic too far. Yeah, I think like I mean for PTON, once again, like for every stock, like personally I won't use all the money for short-term trading. I will use like 1/3 of the money for short-term trading and 2/3 of that for a long-term investment. But it also depends on the nature of the stock. But for PTON, it's a big cap company with a market capitalization at like $36 billion US, right? So it's like stable. It's a very it's a big company with a long history, and it's the price is really stable, and because of the booming tech economy, is like going up right now. But in the long run, I would say for this type of company, the price will still go up in the probably the next like 1 to 2 years. But it also depends. That's why I say we're gonna do more like a research into details about the backgrounds, about the market environment for all that. But in terms of like a short-term trading, for just like 1 day intraday trading, or for swing trade for like a few days, PTON is better to go short from my point of view. And the reason is why, like the risk and return ratio is like 1 to 4, and that's when. Nvidia. Okay, so someone is asking. Let's have a quick look to see what's going on for the overall market. Just a minute. So the overall market, yeah, it's just a rebound today, but up and down after the like Nvidia is not too bad. Someone say like Nvidia is down for like okay. So like this like thanks for my beloved trader friend He just like mentioned about like Nvidia yesterday about the stock split. Yeah, the information is really helpful. Like for stock split, especially for Nvidia, this type of company is like a value company with it's a value and growth company. It's you can see. Let's look into the short here of Nvidia. Okay, so the Nvidia's chairman and board member is a Taiwanese, and as a Taiwanese, I'm really proud of that. I think he's probably one of the richest and wealthiest Taiwanese and handsome Taiwanese. Running the company in the US right now. And you can see that Nvidia is pretty crazy. It's pretty crazy. Which is the way I look into any stock. I like to look over the entire history of this company, entire history of the stocks, from the chart of it, from the company profile, what's the business they do, and then like do a complete analysis before I trade or invest for them. Okay, because money is really hard to make. And we can see that it's a really good like value and growth company, and because of its innovation and the quality of management and the operation and business model, it has been like growing up like really steady and strong since like 2016. What happened in 2016? Just mention a little bit. A lot of like technology, like innovation and breakthrough, like artificial intelligence, like cloud computing, big data, and like drone, like auto vehicle, and all that, and all those things just like had a breakthrough in 2016, and that's why Nvidia, the market leader of like graphic card, just have a surge, have a crazy growth of the business since 2016. And in the past 2 years, because of the cryptocurrency, the people need to use Nvidia's graphic card to do like a Bitcoin mining. So that's how he just went crazy again since like 2020. And the pullback in the past few days, as commented by my beloved trader friend, it's because of profit taking, and I think that really makes sense. And for this type of companies, definitely good for long-term trading for sure. And in terms of like short-term like for long-term investment, it's definitely a good target. But for short-term trading, you can do short-term trading basically for everything, as long as you think the risk and return ratio is like it's like price worthy. It's like more than one to one. Okay, so it depends on the support and resistance line you draw. So for like, we simply draw a very easy point here. You can see probably have a support around like 179, something like that, and with the upside potential at least, in the short run, to like 210. So yeah, it's good to have some like buy order to do long if you want to do short-term strategy. I think it's good because we also draw the support line based on the previous high and the consolidation level here. Based on the consolidation level here. And another foundation level is right here. So how we draw, we have the resistance, the support, and the current price is right here. So you do like the current price is 185, and if you set a support around 179, so the downside risk is like $6, but the upside potential could be from like 209 to like 184, so it's like $25. So what's the so the risk and return ratio, if you have the trading set up in this way, that would be like 1 to 5. It's like 5 times. You use like $1 to bet for $5. Okay, so because like for short-term trading, a lot of time we just like do gambling. So I always say bet, right? But other than short-term trading, it's also good for long-term investment because of a lot of the stories, and we can summarize all that in today's live stream. And I think, yeah, sorry, the time flies. We are coming into the we're coming to the end of the live stream today. But I mean, once again, thanks for your time and watching, and for all the questions, for all the ticker mentioned today. I haven't got a chance to answer. I will definitely collect and all the information and research through them, and try to make some time to discuss over those tickers and questions in my next short live stream on this Friday, 9:15 East time, or probably in my future short video. Okay, so it seems that I don't have enough time to go through all the original asset and ticker I was going to discuss, but the main point today is that in third quarter from July, August, September, it's gonna be a time with a lot of uncertainty and volatility. So I mean, in order to better face and go through these, I mean, we're better to be more conservative. We better just stop gambling for a while, for a little bit, and move the money and capital into like some like hedging assets, or some like stocks or asset with like the hedging, like and the protective nature, like cryptocurrency stocks, and some of the value stocks. But before I end, I at least I wanna talk about this. As you can see, Bitcoin is like forming the that's also interesting, because Bitcoin just and Dogecoin and Ethereum just coming to like kind of a record low this year, a 2020 record low. But obviously they are like Bitcoin, Dogecoin, and Ethereum. They're like forming a base, at least in the short run. I'm also a believer. I also believe that like all the cryptocurrencies still have room to keep falling. Like, and Bitcoin probably gonna drop all the way to like 24 or 20,000 possible, but probably not. It's not gonna happen so quick in the third quarter. And I mean, so in comparison, like relatively, if the third quarter is more likely for the market crash to happen, these cryptocurrency would be the asset for us to hedge, for us to to go as a shelter. Because like when the market crash, when the stock market crash, cryptocurrency don't really have like correlation to the stock market. So a lot of the capital, the money, the US dollar will just like flow and fly into some of the shelter as a hedging strategy. And that might make these cryptocurrency or those like cryptocurrency stock to even like, I mean, going up. I mean, when the stock market keep falling down. That's one of the point I was gonna say. So please, let's do some work for hedging, for portfolio management, and for risk management, especially for the third quarter and for the second half of year, to just survive the turmoil time and just save and keep your money until the COVID-19, until the pandemic go away, until we have go back to a normal life. Okay, so yeah, once again, thanks for your time, thanks for watching, and I will do some research and study through the mention in the chat room, and keep like discussing them like in my next live stream. So yeah, thanks for your time, and I'll see you in the next one. Check it out.